Hello, everyone, and happy Financial Lit Tuesday. So, you all, thank you for joining me for another episode of Financial Lit Tuesday, bringing you news, tips, and tricks every Tuesday at 6:30 p.m. Eastern Standard Time. So, today we're going to be talking about how to claim all your dependents. And we're a week into tax season. Everyone's starting to file. You're starting to receive, if you haven't done so already, your W-2s, 1099s, 1098 mortgage forms, or maybe even that 1095 from the Marketplace Healthcare. And also those letters from the IRS so that you can make sure that you know exactly how much of the advanced child tax credit and the stimulus payments that you received. So definitely want to make sure that you have all your documents in a row. If you do need a tax checklist, feel free to go ahead and reach out to us at Strategic Tax Accountants. So, everyone, I'm sure you're ready to go ahead and get into the topic today. If you're tuning in from the YouTube channel, Sipping Wealth, be sure to hit the subscribe button and the notification bell so that you don't miss any Financial Lit Tuesdays. If you're tuning in from all platforms, go ahead and hit a comment in the comment section. Let me know who's tuned in with me. And then also be sure to hit the share button because we don't want to hold all the wealthy knowledge and all that good stuff to ourselves. We want to make sure we spread it amongst our family and friends as well because they want to know how they can claim all their dependents as well. All right, y'all, let's go ahead and get started. So, like I said, if you haven't done so already, you should be receiving those forms. Now, when it comes to your having a dependent, and that could be caretakers, guardians, parents. There's a lot that comes into consideration when it comes to the IRS and who is actually a qualifying dependent, right? So the financial support is alleviated by several dependency tax credits and deductions that you can be eligible for. So I know a lot of people are like, "Oh shoot, I need to claim this, that child, and whatever the case may be." But we want to make sure that we're doing it the right way, the legal way, right? And make sure we're dotting all our I's and crossing all our T's and following IRS regulations. So a tax dependent is a child, spouse, family member, and even an unrelated friend who needs your financial support and lives with you. Okay. So you provide more than half of their financial support and they live with you, right? All right, dependents can be claimed by the taxpayer as an exemption. I know, like nowadays, we don't have like the amounts for the exemptions, but we do have the standard deduction. So the amounts for the standard deduction, which can help reduce the amount of taxes that the taxpayer has to pay. It also can decrease the amount of income that they also like your taxable income that you're actually taxed on as well, right? All right, so the term dependents. You can claim a child or relative as a dependent as long as no one else is claiming that dependent. So if there's a case where this dependent is claimed by someone else, now the IRS is going to be like, whoop, let's put a halt. And now both parties have to give us proof, or one party has to give us proof that you're actually providing support for that child lives with you. And that's when all that the battle gets a little crazy when it comes to the multiple people trying to file with the same dependent. All right. Dependents must be a U.S. citizen, a resident alien, a U.S. national, or a resident of Mexico or Canada. All right. So so that you know. So the term qualifying child, right? It gets real technical, y'all. Just hold on now. So there's 5 different tests that the IRS actually has so that they can determine whether or not it's a qualifying child. Right? The 5 is your residency test, relationship test, age test, support test, and joint return. So I'm going to go through it. Don't worry, right? So for your residency, the child has to live with you for at least 6 months of the year. So there are exceptions, of course, like if the child's away at school, or if the child's in military, or if the child was on a long extended vacation. had to start a business elsewhere, or maybe they're sick and away from home, but maybe they're getting some kind of healthcare service in like a home or facilities or things like that. So yes, there is, different exceptions, but generally the child has to live with you for at least 6 months of the year. Relationship tests. So the IRS requires that the child is related to you by blood or marriage. So it can be a stepchild, um, uh, by marriage, and it could be an adopted child, and it could be a blood child, but they are still children. It's still your child. So when you file on the IRS, you wouldn't put, okay, my adopted child. It would just be your child. Okay, and then we have the age test. The age test is the child must be under the age of 19. But don't go out there claiming these old people that are mooching off of you unless they're in school. So unless they're in school, if they're a full-time student, then they have until 24 years old. After that, look, you're gonna have to let the child go out the nest, okay? Now there is an exception to this rule. If the child is permanently or totally disabled. So if the child is disabled, then okay, the IRS will allow you to keep claiming that child. But other than that, the child after the age of 19 or a full-time student after the age of 24 have to file on their own. All right. Now, support tests. Now, like I said before, your child cannot provide more than half of their own support. Like you have to provide more than half of their support. You can have a child that, they got a job at Chick-fil-A, they're making $20,000 a year, and you're making $25,000 a year. Like, come on, like there's no way. All right, so it has to make sense. So your child cannot be providing more than half of its own support. Joint return. So if the child is married, or if the child is filing on a joint return, then they can't be claimed by you. Now there is an exception. Okay, the exception is if he or she filed jointly only to get a refund, or or to pay like estimate a refund of their estimated taxes. Maybe they got a few, maybe they had like a small job and they were withholding taxes, and they want to make sure that they get that refunded. Then yeah, they can go ahead and still be claimed. So that's the only exception when it comes to joint returns, if that person is on a joint return. All right. Qualifying relative. Now it gets, I know all y'all, I know the ears have started to perk up. Qualifying relative, I could claim my family member? Yes, you can. All right. So for my qualifying members of your family or friends who is designated by the IRS as a tax dependent, you have to have more than half of the financial support to that person. Okay. And they have to live with you for more than half of the year. So same kind of guidelines when it comes to the financial support and the residency test. All right. But when it comes to relatives, if you have a relative who relies on you for more than half of their financial assistance, you can claim them as long as no one else claims them. Okay. Now, if that relative is a qualifying child of someone else, and that person doesn't file their tax return, that doesn't give you right to go ahead and claim that person, because that child is still a qualifying child, dependent child for their parent. All right. So this is only for relatives that aren't being claimed by anyone else, that you actually provide most of their financial support and lived with you. All right. If your relative is, in fact, like I said, a qualifying child, that puts you out of the running now. Okay. In order for you to claim a relative as a dependent, that family member cannot have a gross income of $4,300, and that's for 2021. Okay. So again, that family member cannot have a gross annual income more than $4,300. After that, it's like, look, no. Okay, all right. And that includes earned income and unearned income. The relative, like I said, has to live with you for the entire year, though. So before, for the qualifying child, it was just at least 6 months. Now, for the relative, they have to live with you for the entire year. Okay, exceptions, of course, there's exceptions, and that's if, the relative died during the year, then you can claim them for the whole year. But that's literally the only exception now. Okay. All right. So dependents and earned income credit. In order for like many taxpayers to get the earned income credit, they must have at least one qualifying child. You don't have to meet the support test when it comes to determining if the child is qualifies for the credit when it comes to the earned income credit. All right, y'all. Now, the qualifying child must live with you in the United States now for at least half of the year. Okay, and they have to have a social security number, a valid social security number. There's no general requirement that the qualifying child has to be your dependent in order for you to get the earned income credit. So if you're falling with someone, another child, and you're like, hey, I provided support for this child and they live with me, you can get the earned income credit. That's fine. When 2 or more people claim a dependent. Now there are, some custodial tests and things like that. Like I said, when there are tiebreaker rules when it comes to if 2 people claim the dependent, you have to provide, proof of address. You have to provide like all those tests that I kind of list out before. You have to meet those requirements. Now, if they're parents and they're both claiming the child, then they have to actually write out a written statement. So there's a form called 8332, and that's the release of claim to exemption for a child by a custodial parent. So there are different things that come into play when it comes to the whole tiebreaker rule. If this applies to you, don't worry, you can go ahead and reach out to us at Strategic Tax, and we'll go ahead and break it down a little more for you. Can I claim my spouse as a dependent? So if you file, your spouse is never considered a dependent. All right. On a joint return, you can claim one exemption yourself and then one for your spouse. So y'all file together. If you file a separate return, you can claim an exemption for your spouse only if your spouse has like no income, if they're not filing a tax return, and they're not a dependent on anyone else's tax return. All right, so it's either you're doing a joint return or they're not, filing on anybody else's return, or has no income of their own and not filing a return of their own. All right. Do college students need to file a tax return? Now, if they do have earned income of more than the standard deduction, which for last year it's $12,400. So if their earned income is more than that amount, then they are required to file a tax return. Now, if they're unearned income, that's like unemployment, maybe interest, dividends, things like that, beneficiaries of retirement plans. If their unearned income is more than $1,100, or even if they have self-employment income of more than $400, they have to file. Okay, so that's when the filing requirements start stepping in. College students still may want to file because they may be entitled to a refund. So it may be something they want to go ahead and tap into so that they can go ahead and take advantage of that refund. All right, y'all. I want to thank you all for tuning in for this episode of Financially Lit Tuesday. Again, I just went over how to claim all your dependents. This is the details. This is the things, the information that IRS had literally built a book around of all the rules and things like that. And I wanted to make sure I provide you with most of the information, just a nice synopsis of it so that you can understand better of qualifying dependents. So be sure to tune in to next week's Financially Lit Tuesday, again at 6:30 p.m., where I bring you news, tips, and tricks on how to wealth up, y'all. Have a great Financially Lit Tuesday, y'all.